Hi, I'm Joss Murphy, research analyst at Chelsea Financial Services. Today, I've been joined by Paul Marriage, manager of the Tellworth UK Smaller Companies Fund. How are you, Paul?
Thanks, Josh.
Great to hear, great to hear. Well, Paul, last year you were generally optimistic on the sector with M&A and a healthy IPO market. Yet, we didn't really see the recovery in smaller companies that many maybe thought. Why is that?
So what we didn't see as a big 20-30% year, what we did actually see was a good small cap fund made you 7+% last year. It's ahead of cash. It's not the blowout year that you'd expect from small cap. And to some extent, small cap needs to do that blowout year fairly soon to remind people what it can do. Obviously, 22 was a pretty tough year for people. So actually quite okay recovery in the end, not a bad asset class to have been in on a 12-month view. And these, January to December, you could argue is an arbitrary period, but looking at it on a calendar year, it wasn't actually a bad year. But I think you make two interesting points at the beginning. I think you're talking about M&A and IPO. So IPOs just didn't happen. There's one IPO tried to come that looked like it might make it in the kind of mid-cap space that was cap payments. That fell flat on its face. It was a bit of a disaster. Probably cost much enthusiasm for other IPOs for the rest of last year. I think we will see IPOs again this year, although M&A are conversely just accelerated. In fact, M&A became the big theme going into Q4. And this is a great sort of background to the market in general. So if you think about what M&A means in UK small cap, it means that there's people who aren't in the UK market. So they're not market operators, they're not fund managers like me looking and buying and selling shares. These are people outside the market saying these UK listed companies are too cheap. So we're going to come in from outside, trade buyers, private equity, buy them, take them private, grow them out outside the market. So M&A has really come back, and it just highlights how much value there is in the UK market. We don't mind M&A. There's plenty of opportunities out there, plenty of companies. So we don't see it as a bad thing. We see it as a good thing because it is showing people the inherent value we have in our marketplace.
And Paul, if interest rates falls, could this help UK smaller companies recover?
I don't think the interest rate UK smaller companies thing is it's a sentiment thing. Yeah? So interest rates fall, people get more positive on equities. Most of the stocks we invest in have pretty strong balance sheets. So we're not really looking at a scenario where a fall in rates suddenly makes a heavily indebted company in a much better place, because we don't really invest in those. So I think there is a perception that smaller companies have weak balance sheets, and that's not really the case these days. Maybe in the case a long time ago, but small companies that surviving, thriving small company generally not bring it with them. So it's a good use, generally a bit more flexibility, less interest costs, more cash to spend on growing the business perhaps. But I wouldn't say it's a big binary call. It's a big sentiment thing for wider markets.
Certainly makes sense. For the past couple of years, a lot of UK companies have struggled with higher input costs and strained supply chains. Are these pressures over? And is the outlook for profit margins better now?
Well, you're absolutely right. There was a big supply chain input cost shock as we came out of COVID, but also due to a whole range of things like shipping costs went through the roof, issues in the Panama Canal, et cetera, et cetera. So companies had to adjust really, really quickly then to changes they'd never seen before. And then we saw a kind of reversal of those, a normalization. Supply chains pretty much fully reopened in 23. Companies no longer saying, we've got an issue, can't get this product out the door because we're missing this component and it's stuck somewhere, or it's not being made, or the people making it can't find components to make it. So that supply chain squeeze gone away. So no longer a big issue. I think the experience of 22 did make companies think a lot about how and where they make stuff, and probably was a healthy reassessment of supply chains to make themselves more capable of coping with input cost volatility, probably here to stay, but also in some ways thinking about, where was the best place to make stuff and the components. And that probably meant for most companies bringing things a bit closer to home.
And can you share with us a couple of your best ideas at the moment?
Yeah, I think, one of the big things I said right up front is UK small cap offers plenty of value. We are not a value fund. We're a UK small cap fund. So we're trying to find, good stock ideas in the 100 to 500 million area. We're not micro cap. We're not mid cap. We're right there. So really in there, there's a couple of things that really stand out to me. And one of them has been particularly interesting lately because of a transaction in the media sector. The very back end of last year, a business called GlobalData, which is a large data provider, imagine like a Bloomberg or a Reuters type business, selling mainly into corporates, so not into financial market players, but into pharmaceutical companies and stuff. It's a very entrepreneurial business led by a guy called Mike Danson. And he did a clever deal where he bought private equity in to buy a stake in one of his divisions. And that was done at a multiple of 22 times EBITDA. We're actually invested in GlobalData, so we benefited from the share price, the positive share price reaction. But there he was saying to the market, look, an external investor is valuing a decent chunk of my business at nearly my whole market cap. And this made us think about what else we own. So we own something called Wilmington. Wilmington is another media stock. It's a provider of data and services and training into the legal and compliance markets. Whether we like it or not, the legal and compliance markets are big and growing globally. Wilmington's a leader in that space. Wilmington has net cash. Actually, GlobalData had a bit of debt. And one of the things about the deal was that the transaction was going to wipe out the debt. That was an interest-sensitive company, referring to what we were saying earlier. Whereas Wilmington, niche leader in that training space, net cash of 30 plus million, and trading on 8 times EV/EBITDA. The GlobalData deal done on 22 times. So for me, Wilmington is a really good example of a great market-leading UK business, strong balance sheet, no interest rate worries, but just trading on the wrong multiples by some margin. So I think that's a really great way to trade. It's done very well for us. It made a good sensible acquisition the other day. So I really think Wilmington is a great example of how what's happening in the wider sector. That's a UK small cap that stands out as a value opportunity for us, but also it's a leader in the niche. Really like this combo of really good quality leading companies that are offering fantastic value. And that leads me nicely onto something different. In Wilmington Media, a little less tangible. Gooch Housego's high-tech engineering business makes stuff. Gooch Housego's history is about leadership in something called a Q switch. You use a Q switch to change the wave of a laser. Don't ask me any more questions. I'm no physicist. But it's the world leader in Q switches. And that was a great business over the last 30, 40 years. And over time, Q switches have become a little bit more common, probably a little bit more challenging to make cheaply in the UK and a bit more competition. So Gooch Housego have taken all that photonics IP, which is, the technology around the movement of light, which they're very strong in, and expanded into a number of different areas, in medical and defense. And they've really broadened the business out. That hasn't been a seamless process without quite a few bumps in the road, frankly. New CEO came in last year, had a really good look at it, and so look, Gooch Housego is a great IP-rich business. We could do some things a bit better, and we need to focus on just making the business a little bit more focused, a little bit more looking at what the end client really wants, a little less blue sky R&D, a little more delivery. Now, Gooch Housego makes kind of 10% margins on 80, 90 million of sales today. He thinks they can make towards 20% margins and see those sales grow. So at the moment, people are valuing that 10% margin for a really IP-rich business, let's say 10, 11 times, feels a bit low. Imagine it was a 20% margin business growing at 5, 10 top line. That 100 million of sales, make 20 million. That's going to value that at least 15 times. So your market cap 150 today. Future market cap 300, 400, that wouldn't seem unreasonable to me. So I think Gooch Housego is a great opportunity to buy IP-rich UK business, leads in lots of attractive niches, exposed to a whole load of exciting things like AI, the chips behind AI. Gooch Housego supply into the machines that make those chips. They have the best quality kit, so the best maker in the world wants to come to Gooch Housego and Somerset, buy that kit, put it into their machines. All sorts of really interesting markets, undersea cables for data, a really broad range of exposures there into all sorts of exciting things that go on in the world. Classic example of a UK small cap, which is really undervalued, but really IP rich and really well managed business. I think new management team are really grasping that. So a bit of a management story, bit of a margin growth story. So yeah, Wilmington, Gooch Housego, I think are really good examples. And there's dozens of Wilmingtons and Gooch Housego. We've got 40 odd of them in our funds. So they're not super difficult to find. And I think it's just a really, really exciting time to be looking to buy more of those kind of companies.
Well, Paul, thank you very much for your time.
Thanks very much for your time.
And if you'd like to find out more about the Tellworth UK Smaller Companies Fund, please visit chelseafs.co.uk. Thank you.